Good afternoon, everybody. Scott Riley, the Market Update Desk with Mortgage One, NMLS number 157152. It's August 19th. Had some really good news to help the Treasury and bond market today. Um, they're both moving higher this morning after an announcement from the Treasury stating that they're going to double the size of their current buyback operations on longer dated maturity treasuries, which means the 10, 20, and 30 year. The Treasury started this particular buyback operation in 24. They doubled it in size in 25 to 2 billion per operation, or roughly about 2.7 billion per month in 10-year treasuries. They announced this morning that they are going to again double that operation size once again, starting September 9th, which means they'll be buying about 5.5 billion per month of these treasuries. Now, granted, this doesn't sound like a gigantic amount compared to what we saw during QE1 and QE2, but it's having a definite effect in the bond market right as we talk, and it needed a boost. The Treasury is likely doing this because yields have recently risen to levels we just hadn't seen in a number of years. In fact, the 30-year Treasury reached the highest yield in almost 20 years, which was at 5.9%, I believe, yesterday. Now, while the 10-year was at its highest level since January 25th, in addition to that. Now, they said they would do this increased operation through at least, quote, November 4th. But we've definitely seen in the past that we wouldn't be surprised if this continued for a good amount of time past that. They have continued to extend these things if they're seeing positive results in the yield curve. There's been a lot of one of the challenges with bonds right now, specifically the 10-year treasury, is there's been a lot of corporate bonds being issued from tech companies like Alphabet and Open and other huge tech companies that they're trying to fund their AI build out. And the yields are high really to entice buyers. In fact, they're getting almost 7% on those corporate bonds. Now, this is having an ill effect to the 10-year federal treasury because it's increasing competition and it's draining some of that liquidity that would normally be there for buyers in 10-year treasury auctions and 20-year auctions and bringing them to the corporate bonds that have a higher yield. Does potentially have a downside to these corporations and these bondholders because we haven't seen the scope of corporate bond issuance ever really. So it's a new threshold, new thing that we're seeing. Now, our National Association of Realtors did release their pending home sales report for July. Now, that measured signed contracts on existing homes. That report did show that sales fell 2.3% last month. This was weaker than a slight gain that we were projected to have. Now, there was also a zero point 0.6 revision higher to the June report. So that part, at least, was a little bit positive. What's causing it is the pressure points on rates. Now, what we're seeing is it's creating pullback with buyers, with rates, but honestly, we're only 1/8% higher than where we were last year. So buyers need to see the totality of everything, not just the news. Let's look at historical data, current data, and make educated decisions, not based on news, positive or negative. Now, one of the things in stock market that I saw today, Moderna and Merck are up huge today on positive late stage trials of a potential cancer treatment. So that is really good news, specifically for melanoma. Purchases, also NAR was reporting purchases were flat month over month, so they didn't pull back, which was good. The Dow's up 100. Oil is at, as I'm looking here, 81.90. I'm sorry, 86.84. It's up $1.90. We had gotten into the low 70s and it's been ticking up. 10-year Treasury at 4.672. Both mortgage-backed securities and the 10-year Treasury are butting up against the 25-day moving average as we speak. Hopefully, we can close to the better side for each of those of the 25-day moving average so we can break through that resistance level and start to make our way to the next level. That'd be a very positive thing That would mean closing today probably at about 4.65. So we'll watch that really closely. Give us a call. We'll run some numbers for you, help you know what you can qualify for, what payment would be, also what loan programs are out there to benefit you. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.